Have you ever wondered how some people grow their wealth while you're just trying to save a few dollars every single month? Here's the secret. They let their money work for them through investing in the stock market. But if the stock market sounds way too complicated or risky, don't worry, I've got you covered. In this video, I'll break down step by step, so by the end, you'll know exactly how to start investing in the stock market, even if you have no experience or even if you have a small budget. By the end of this video, you'll have a clear understanding of why investing in stocks is such a smart move. You'll also understand, how do I get started, even if I got a small budget. Different investing styles and which one suits you will also be a topic that we'll discuss in this video. You'll also understand how to deal with expensive stocks, how to manage risk, and how can you build wealth over time. So if you're ready to make your money work for you, then let's dive right in. Let's get it. So why should you invest in stocks? Think about this. You work hard for your money, but wouldn't it be great if your money actually started working hard for you? So that's exactly why investing is so important, and it's so important for us to actually get started in this space. Instead of letting your savings sit in the bank, earning close to nothing, investing allows your money to grow over time. The stock market, listen, okay, it has historically provided some of the best long-term returns compared to savings accounts, bonds, and even in real estate. This means that by investing your money wisely, you're not just saving, you're actually building wealth. And the best part about this is you do not need a lot of money to start, okay? You don't have to be a billionaire to make money in this space. If you consistently invest even small amounts, it can add up to something very, very, very significant in the future. And that brings us to our next big question. What is a stock? All right, that's number one. And why do companies sell them? So a stock is simply a small piece of a company. When you buy a share, you're actually gaining ownership over that company. That means you get the benefit when the company grows and the stock price increases. So why do companies sell stocks in the first place? That is really important to understand. So it's simple. The reason why they sell stock in the first place is because they need money to grow their businesses, and they want you and I to invest in them so they can do just that. So instead of borrowing from banks and paying interest, by selling shares, these companies will sell it to you and I so that we can help them make money. So investors in return, they get a chance to make money if the company does perform well. So now that you know why investing is important, let's talk about how to get started with this, all right? So the first thing is, if you're completely new to investing, here is a simple step-by-step guide to get started, all right? No gatekeeping here at all. So the first thing is open up a brokerage account. You're going to need a platform to buy as well as to sell stocks. Some popular brokerage options are Fidelity, Charles Schwab, Robinhood, E-Trade, and TradeStation. Most of these platforms offer commission-free trading, making it easy for beginners to get started. The next thing is set your investment goals. So ask yourself, are you investing for retirement? Are you saving for a big purchase? Or are you just looking to build long-term wealth? Your goal is going to shape the strategy that you use. It's also going to help you to determine how much risk that you're comfortable with. So number 3 is to start small. Like I said earlier, you do not need a whole lot of money to make it happen in the stock market. So thanks to fractional shares, you can invest with as little as $10 and still own a major company. Companies like Apple, companies like Amazon, companies like Boeing, right? But be sure, this is the 4th point, to do your research and never invest blindly. Always check a company's financial health, their past performance, their future growth potential, understanding that these factors will help you to make smarter investment decisions along the way. So now that you know how to start, let's talk about different types of investment styles. So when we think about investment styles, one thing that's important is that you find what works for you. Investing is not a one-size-fits-all. Different people have different goals, and that's why there are different investment styles for us to leverage. So here are 4 common approaches. The first one is value investing. Now, this strategy is focused on finding strong companies that are undervalued. Basically, stocks are trading less than what they actually are worth. So Warren Buffett is one of the nation's most foremost and most famous value investors. And his approach is all about buying great companies at a discount and holding them long term. All right, so that's number 1. Number 2 is growth investing. So growth investors focus on companies, especially in the tech sector. These stocks may not be cheap, but they offer the possibility of big future gains. Think about companies like Tesla, like Amazon, or Google when they were just starting out. And look at where they are now. The third thing is dividend investing. This is a strategy for those who want to have passive income. Dividend stocks pay out a portion of their profits to investors, meaning that you're going to get paid regularly just for owning the stock. Like, listen, that is the real deal right there. Many blue chip companies like Coca-Cola, Johnson & Johnson, they have a long history of paying dividends. And the final style is index fund investing. If picking individual stocks sounds way too complicated, listen, index funds may be the way for you. These funds track the overall market, providing steady, long-term growth at a lower risk. This is a go-to strategy for many investors who want a simple, hands-off approach. Each of these styles has its own benefits, so pick one that fits your goals and aligns with where you want to go with these stock market streets. The power of consistent investing is incredibly important to understand. One of the biggest secrets in the stock market is consistency, all right? That is the secret to success. So let's say you invest just $50 per month. Over time, thanks to compound interest, a small amount can grow into something really, really, really big. And this is actually called dollar cost averaging. This is where you invest a fixed amount regularly, no matter if the market is up or if it's down. This strategy helps to smooth out price fluctuations, because we know this market can be a little crazy, right? And reduces risk over time. So one of the things we need to make sure, though, is that we manage our risk, okay? So while investing can be profitable, we got to make sure that we ain't losing no money out here, right? So first and foremost, diversify your portfolio. Never put all your money into one stock. Instead, spread your investments across different industries and sectors to reduce your risk. Now, the next thing is do your research. Never follow stock tips blindly. Always analyze the company's financials, their business model, and long-term potential before investing. Lastly, think long-term. The market goes up and it goes down. But historically, it has always trended upward over time. So staying invested long-term is a key step for success. And let me add, one more thing for risk management is to add stop losses. This allows you to automatically sell your stock if it drops too much, right? And this helps you to minimize your losses. So when we want to minimize our losses, we're going to make sure to put that stop loss into play. So people always ask, should I wait for the perfect time to invest? The truth is, the best time to start is right now. Listen, the earlier you start, the more time your money has to grow. Trying to perfectly time the market is nearly impossible, so it's better to start investing as soon as possible and stay consistent. And so that's it. That's the complete beginner's guide to investing in stocks. And if you made it this far in this video, listen, you're already ahead of the game of most people, okay, when it comes to understanding how to grow your money, all right? So if this video helped you, hit that like button and subscribe for more investing tips. Now, I want to hear from you. What's the biggest challenge that you've had when it comes to investing? Go ahead and drop that comment below and let's discuss. Thank you so much for watching, and I'll see you in the next video.